Hello and welcome. You're watching First Stick here on News9, where we bring to you the morning buzz on the Lal Street. I am Suyash Maheshwari, and with me in the studio is Amit Ranjan. Now, it's a Monday morning and a start to a brand new week, and the markets have kicked off today's session on a flattish note as caution prevails ahead of the release of headline inflation data. Now remember, the Reserve Bank of India in its monetary policy meeting last week emphasized that they will not cut rates until inflation shows a more decisive downward trajectory towards the 4% mark. So inflation data will be keenly eyed. Now inflation data from the US and UK will also be released this week, and of course we have the December quarter earnings, and over 1,000 companies are lined up to release their Q3 results this week. But before we delve deeper into that, let's look at what we got in terms of a handover from the global markets. Amit, over to you.
Good morning, Suyash. So S&P 500 did close above the 5,000 mark last week. It closed in the positive at 0.57%. Dow Jones, however, it was in the negative, marginally at minus 0.14%. Nasdaq composite was in the positive very much at 1.25% in the green. Coming to the European markets, they were in the red again. Stock 600 closed in the negative at 0.09%. Hang Seng this morning is in the negative again at minus 0.83%. Nikkei, however, is slightly in the green at 0.09%. This week, the Chinese markets are going to be closed due to the Chinese Lunar New Year celebrations. So the markets over there will not give us results.
All right, and not much in terms of course, global handover. And if we even look at this rally that is playing out in the global market, especially in S&P 500, it's really 5 stocks, the 5 mega tech stocks that are driving the markets higher in the US. Whereas if you look at the broader Russell 2000 index, it's in the negative in the last 4-5 months. So, we need to be cautious about this rally that is also playing out in the global markets. But coming back to our own markets, a flattish start for Indian markets. Nifty, opened above the 21,800 mark in today's trade, but has been largely quite volatile in the opening trade itself. India VIX as we speak is back above 16 levels, and it's actually at around 16.3 levels. So volatility is elevated, and market are pretty much slipping in and out of green. As of 9:30 a.m. Nifty was above 21,800, but if I look at the markets now, we are in fact very close to the day's low. Nifty as we speak is just above the 21,730 mark, and a crucial support for the index would perhaps come somewhere around the 21,630 level, which was Friday's low, and that's where the index coincides with its 20-day moving average. But broader markets also, they are looking rather mixed this morning. Mid cap index is trading in the green, whereas the small cap index is trading flattish with a negative bias, and VIX, as already mentioned, that continues to be a problem for the market, especially for the bulls. India VIX is up 4.25%, and that is as of 9:30 a.m. this morning. But to understand what's going on in the market and perhaps take cues from there on, let's also bring on board Avni Bhatt, Senior Vice President at JM Financial. Good morning, Avni. Thank you for joining us here on News9. Always a pleasure speaking to you. And Nifty, it has been broadly trading in this range of 21,500 to 22,100 for the past few sessions. I mean, if there is a breakout, which direction is the index more likely to go, and how much might it move? I mean, if you could give us some estimate in percentage terms.
Good morning, Suyash. Good morning, Amit, and a very good morning to all the viewers as well. Currently both Nifty and Bank Nifty are, they are stuck in a range. They are trapped in a range, the range being 21,700 for Nifty on the downside. This is as far as the closing basis is concerned. Even day before yesterday, on Thursday also, Nifty did see a dip, but closed about 21,700. Friday also, it closed about 21,700. And today it is trying to, sustain about 21,700. So on the downside, 21,700 on closing basis, or else if we look at the swings, then the Friday's low of 21,630 is an important level. But the all-important level below which the trend reverses is 21,500 on the downside. So if at all it closes below 21,500, then we can say that for the temporary period, the bull run is done for now, and we may see some further downside. And on the higher side, again, we are seeing a lot of selling pressure around the 22,000 mark. The swings being up to somewhere around 22,100. But closing basis range currently is 21,700 to 22,000. And the broader range, if at all option writers have to consider a particular range, then 21,500 on the downside and 22,200 on the upside. This is the broader range for Nifty. Now, going ahead, where is the breakdown or breakout coming? So, most probably the kind of buying that we are looking from, especially from the domestic players, the mutual fund flows and all. I think this is a temporary consolidation phase. Eventually, we should be seeing a breakout about 22,000, 22,200 mark. And after that, the rally can continue up to say around 3 to 4%, which would be anywhere between 22,800. And similarly for Bank Nifty, it's weaker of the two indices. For Bank Nifty, 45,000 is a very crucial support level. And on the upside, 46,000 and 46,200. These are the two major levels. So we are looking at a move above 46,000 up to around 46,200. But by closing basis, it comes down to below 46,000. And similarly on the downside, 45,000. So this range play, I think it will consolidate, and this range play may go on for a couple of weeks more. And eventually we should be seeing Bank Nifty also cross 46,200 and move towards 47,000. So view is positive. It's a buy on dips market, and most probably the range breakout will be on the upside, and we should be seeing another 3 to 4% move after that happens.
All right, and Nifty Bank, of course, we saw some bit of a pullback from the 200-day moving average, on Friday, and the index bounced back sharply. But this morning it's trading with a cut of about 0.4%. But PSU banks, they have of course outshined, and they have been outperforming. Even last week they were up. The entire PSU bank index was up somewhere around 5%. But State Bank of India, that is leading the way. The stock has rallied by about 12% in the last 5 sessions. Avni, what's your view on SBI? Is the tide finally turning in favor of SBI?
Definitely, Suyesh. As you pointed out, SBI is the one PSU stock that has given a fantastic move in last entire week. But if you look at the consolidation that it has undergone right from 15th of December till 5th of Feb, this consolidation has been pretty strong. And such consolidation phases are always good, and whenever the breakdown or a breakout happens, the eventual targets are also pretty high. Now, this is SBI has given a breakout above the consolidation range. The breakout that has occurred around the 660 mark, the upside targets are anywhere between 775 to 780 levels. So any dips in the stock, I think you should be using it as a buying opportunity. Even if you look at the options data, there's a huge amount of build-up that has happened at 700, 710 and 720 puts on Friday. And this is a very good put writing is always a very good sign as far as the underlying trend is concerned for the stock. So we are looking at around 780 to 800 targets. Obviously not in a very short time, but eventually in probably if you have a perspective of around 2 to 3 months, we should be seeing these levels. So it's a buy on dips stock that now the scenario that it is showing.
Good morning, Avni. Another company that declared its results was Tata Power. Now, it's very muted results. Net profits up only 2%, revenues up only 6.2%, even though high growth in EBITDA, about 20%. Is this muted growth because of the new projects in Tata Power Solar and Tata Power Renewable Energy that will basically be up to taking its capacity up to 10,000 megawatts in clean energy? Is it that because this is a stock that has given up to 85% returns in the last 1 year, over 60% in the last 6 months, but last 5 days it has been down. Today it is down 4.46%. Last 5 days it has been down almost 3.7%. What do you make of Tata Power? Is it just a small hiccup in the way because of the costs that they are incurring due to these new executions?
Amit, so as you pointed out, it has given fantastic results in last 2 months, and I think it is time for this stock also to consolidate, to see some profit booking and cool off in the current uptrend. So I think for the next 1 month or so, it should consolidate in the range of around 350 on the downside, and it is going to take time to come back to its all-time high levels around the 400 mark. And consolidation should continue for at least 1.5 months. Nothing wrong in the company. Expectations, were not met, and that is the reason we are seeing some profit booking in the stock. And this may lead the stock to around 350 on the downside. That should be a good level to enter again.
Hi Avni, the other company is ONGC, which posted its results, and their profits and revenues were down. How does one look at that stock?
ONGC EBITDA was slightly lower, but the PAT was in line with the expectation. And moreover, it's a robust dividend play. So that's a good part of ONGC. And in the short-term moving averages, if you technically look at the stock, the short-term moving averages confluence in the area of around 256 to 258. So we are looking at some profit booking in the stock. 256 to 258 is a good support area, and eventually the stock should resume the rally and move up towards around 285 to 300 on the upside. In fact, the stock after today's cut, it's there in my buying radar also, and we'll be considering buying the stock around the current levels of around 260. So the view is positive on the stock.
Okay, so and what are your picks for the investors today?
Today again today mostly these are all technical picks, and also I'm going to give you the long-term targets for these stocks because most of them have given good breakouts. My first stock would be Bharat Forge. One can enter in the region of 1305 to 1310. On the upside, the targets are 1388, which is the trading target, and 1465 is the positional target for the stock. One can keep a stop loss of 1270. So huge unwinding has been seen in 1300 call, and also there is a very good addition at 1300 put. So I think this is a very positive sign for the stock. We'll be targeting 1465 on the upside on positional basis, and 1388 on trading basis. The second stock is Adani Ports. Adani Ports has seen multiple strikes and calls have seen unwinding, right from 1250 call to 1400 call. So this is a clear sign that the call writers are exiting their positions and there is further upside in the stock. So in the region of 1250 to 1260, one can enter into the stock for a trading target of 1325 and a positional target of 1390, and keeping a stop loss of 1210. The third stock, which is the favorite of all, is Reliance. So Reliance has formed a very good base at 2900, and also put writing has picked up at 2900. In fact, for the February series, the highest OI is at 2900. So one can enter into the stock in the region of 2900 to 2920 for a target of 3000 and keeping a stop loss of 2840. The third stock is ACC. ACC on Friday has given a clear breakout above the consolidation range, and put writing has picked up at 2600 put. So one can enter into the stock with a positive view in the region of 2600 to 2620, targeting 2765 and keeping a stop loss of 2540. And lastly, as we already discussed, ONGC is in my buying list for a target of 290 to 300. We'll be keeping a stop loss of 258. In fact, 256 to 258, this is the area where the support is. So if one considers keeping a slightly larger stop loss, it's even better. But from a trading perspective, one can keep a stop loss of 258.
All right, those are the short-term stock calls from Avni Bhatt. Ma'am, always a pleasure speaking to you. Thank you for joining us here on News9.
Thank you.
But with that, let's take a short break. On the other side, we'll be joined by Mr. Gaurang Shah of Geojit Financial Services.
There's a new video around what deep fake can do.
We had seen a trailer of this a few days back.
Donors should not be only on the platform.
We'll have to wait and see how those play out.
Hindenburg's report cannot be taken as gospel of truth.
वर्ष 2070 तक भारत नेट जीरो का लक्ष्य हासिल करेगा.
There is certainly a wall of capital coming into the clean tech, climate tech space, not just in India but across the world.
This and more, streaming on world's first news OTT, News9 Plus. Download now.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है Money9। आजादी पैसे की, अभी डाउनलोड करें।
Welcome back. You're watching First Stick here on News9, and the markets now they have slipped in the red. In fact, as we speak, Nifty is very close to the day's low. As of 10 a.m. this morning, Nifty is down 0.25%, hovering just above the 21,700 mark. Sensex is also down 0.3%. It's below the 71,300 mark. The broader markets now they are feeling the heat this morning. The mid cap index is down 0.5%. It's again trading below the 49,000 mark, and in fact we opened around 49,000 mark. From there we have slipped, and the index is at its day's low. The small cap index is the worst hit. It's down around 1.25% and very close to the 16,000 levels. Volatility remains a problem. India VIX is up 5% almost and above the 16 mark as of 10 a.m. this morning. But with that, let's also bring on board Mr. Gaurang Shah, Senior Vice President at Geojit Financial Services. Thank you for joining us here on News9, Gaurang. Now, want to talk about the global markets first. And earlier, good news in the US, at least on the macro front, was being perceived as bad news for equities because it would lead to a spike in the yields, the 10-year Treasury yields. But with the talks of a further rate hike, at least pretty much done and dusted now, it looks like good news is starting to be good news again, isn't it?
Thank you, Suyash, for having me on the show, and morning to all of you also. I think rate hike in US has been put to rest by the fact that there have been a pause, and the commentary was accommodative or a little bit dovish, whatever you want to call it. And there was also a news flow that Fed might possibly start cutting rates possibly by mid of this calendar year. That is maybe about June, July 2024. It remains to be seen, wait and watch. But I think more importantly, we have to look at our data points, what our RBI governor has said last week, and of course the recommendations made by the Monetary Policy Committee. Data points in terms of interest rates, inflation, GDP growth rate, and more importantly, the third quarter earnings that we are witnessing for this financial year. Possibly this week will be more or less decisive and curtains down from next week onwards, we'll not have much numbers to speak about meaningfully. There will be small here and there companies that may announce numbers. And in fact, last week, Monday, when I was with you on the show, we had mentioned a range in the market that is on the Nifty 22,000, 22,100 on the higher side, 21,700 to 21,600 on the lower side. And I think minus the data points that have been otherwise being seen as a trigger with respect to the domestic and global news flow, our sense is that view last week of a range bound market can get extended to this week also. But stock specific news and I think actions will definitely be there.
And Gaurang, oil prices now, they have surged, and how? Because I think Brent crude is up around 6% in the last 1 week, back above $80 a barrel mark. Is that a concern? Could that, stifle the pre-election rally that everyone is hoping for?
Pre-election rally, I don't know. Pre-budget rally, pre-election rally, I don't know how far I would possibly go with that kind of a thought process. Yes, let's face it. And the sad part is that in our country, throughout the year, you have an election happening in some corner or the other in our country. So I don't read too much into that short-term, medium-term rallies. I look at more durable, long-term rallies and sustainable ones rather than just one-off blips because of some event. And more or less, I think crude oil has always been a very important commodity as far as India and other, large crude oil consumption nations are concerned. And whenever crude oil has to boil above 85 towards $90 a barrel, our mathematics and calculation goes a little bit haywire. And the fact of the matter is that while you keep one eye on crude oil prices, you have to keep your other eye on the rupee dollar equation as well, because that also impacts the oil pool account deficit to a greater extent. But I think this crude oil spike that you are seeing is more because of the unfortunate, chaotic activity by Houthi rebels in the Red Sea and a concern in terms of global supply pipeline. But I think our country and our external affairs minister, Mr. Jaishankar, has also spoken to Russia in his last visit very recently to sort out minus the Red Sea supply side, how we can get our own energy requirements safely secured and at a reasonable price.
All right, and as we speak, Gaurang, shares of Apeejay Surrendra Park Hotels have made an impressive debut on the bourses. The stock has listed at around 187 rupees, which is a 21% premium over the IPO price of about 155. Now, I mean, Gaurang, the focus is once again back on the hospitality segment, and of course, these stocks are rallying for the past 12 months. What's your opinion on Apeejay Surrendra Park? How is it looking if you stack other hospitality stocks according to valuations?
So I won't comment on this one because there is no coverage, Suyash, but let me comment on the sector, and I think the sector is looking quite promising. Whether it is to do with Atithi Deva Bhava or enhancing the prospects of India being a preferred destination in terms of foreign travelers coming into our country, footfalls are going to go up. Domestic travel, leisure travel as we call it domestically, is also picking up steam. Binge travel is something that we have witnessed post the restrictions getting lifted off. And of course, the numbers, if in terms of the occupancy in a flight, if you go to see, I was flying to Kolkata about a week back and I saw the rush not only on Mumbai airport, but also in Calcutta airport while I was returning back to Mumbai. So I don't think there is any kind of dearth or any kind of lower level in terms of travel activity. I think both business as well as leisure travel is picking up. And I think that should keep the cash registers of the hospitality sector, that is hotel sector, ringing. Not to forget, Suyash, realizations per rent has improved. Occupancy in terms of percentage has improved. From COVID levels to current date, we've seen an increase of almost about 15% in terms of tariffs. Commentary from the management of various companies with respect to Indian hotels or likes of Lemon Tree or Taj GVK or EIH hotels. These are not recommendations. My recommendation will be restricted to Indian hotels because that's where we have a coverage on the fundamental side. But from current date, in the next maybe about 1.5 to 2 years, you're going to see another 15 to 20% hike. This is only in the room tariff. You add to it the food and beverages and possibly festive season, marriage season, wherein your banquets get booked for maybe about a couple of months together. I think that's the added revenue. So we remain positive on the hospitality sector.
Good morning, Gaurang. Keeping on the hospitality sector, you said cash registers will be ringing in the times to come. Do you see more companies and newer companies coming up with their IPOs in this sector? And do you see market capitalization in the hospitality going up the way the rally is going in the markets? In the same trajectory?
I think they should, honestly speaking, they should, because the number of large defined players in this particular sector is very limited. There are a lot of mid and large, lot of small and lot of micro cap names associated with this sector. So as the opportunities pick up, and mind you, I forgot to mention in the earlier answer to the question that Suyash had asked me, there are a lot of new launches lined up from large names, be it Indian Hotels, be it Lemon Tree, be it EIH, be it Taj GVK. I think quite an interesting number of properties, and even events like the in Ayodhya, Ram Mandir Pran Pratishtha, and pilgrimage spots getting identified as a big opportunity for these hotel industries. I was watching an interview of ITC hotels where Ginger and Vivanta are planning to open up more hotels in a lot of part of the country. So opportunities will be there, and I think you should see some interesting names come out with an IPO to hit the street. But yeah, a lot depends what that name is and what valuation are the IPO price.
All right, and moving on, we are in the midst of the earnings season, the December quarter earnings season. In fact, we are drawing curtains to it this week, and Coal India comes out with its results today. Gaurang, I'll come to you in just a bit. Amit, what is the street expecting?
Very, very muted growth in revenues. In fact, net profits are practically expected to remain exactly the same. A growth of only 0.3% is expected in net profits. About a growth of about 1.4% is expected in revenues. EBITDA's margins also expected to go down. Now, when I look at Coal India, in the last 5 days and even today, the stock has gone down almost 5%. But for a stock that has given returns of over 100% in the last 1 year, is it a correction time or is there something else happening?
And Gaurang, to add to that, we saw quite a bit of profit taking in the PSU stocks generally on Friday. The index overall, the BSE PSU index overall was down about 2 to 3% on Friday. What's your overall take on the PSU stocks and Coal India?
Well, so nothing goes up in terms of infinity, whatever, whether it is private or public. There has to be a full stop, Suyash, Amit, when it comes to run up. Not to forget, nobody was complaining when these stocks were going up for the last maybe about week or fortnight, correct me if I'm wrong. And profit booking has to be seen as an healthy opportunity. You cannot expect any stock associated with any sector, whether public or private, to go up indefinitely. I think there is valuation, there is sanity level that has to come in. And I was surprised to see the kind of reaction on the social media, Suyash, after the Honorable Prime Minister just made a passing reference in terms of comparison of his government 10-year working with respect to profitability of PSU companies and the earlier government 10-year working with. He was just making a reference with a company called LIC, and I think the social media was on fire. For the love of God, he is the Prime Minister of the country. He is not the Prime Minister of the stock market, nor is he a fund manager. His business is not to give recommendations. I don't know why people are, misinterpreting these kind of statements. I think one has to just be a little bit sanity. But having said that, I think Coal India, just to answer your question, we have a coverage. This stock has also run up. It took a pretty long period of time of hibernation for Coal India to do the kind of performance that it has done. I think at current valuation, you should see a little bit of breather profit booking. Numbers are going to be out today. I would not want to make any kind of forward-looking statements. But I think any company, any sector, whether public or private, you are going to see a pause after a run-up in terms of profit booking.
All right. I mean, of course, there are intermittent hurdles on the way up. But the overall view is still positive, is it?
Well, I have always been a perennial, optimistic guy, Suyash. I don't see any reason. We have seen 22,126 as the highest point in terms of Nifty spot. And where are we from those levels? Are we down 20%? No, bro. I mean, we are down just a couple of percentage or maybe 0.0 something. So, at higher levels, you will get higher point-wise correction, but you have to
Right.
look at it in terms of percentage of the base that you are working at. So
Hmm.
I have no possible negative view in terms of our markets. It's always good to see a brief period of consolidation.
Always good to see a brief period of consolidation. That's a word from Mr. Gaurang Shah. Sir, always a pleasure speaking to you. Thank you for joining us here on First Take.
Thank you.
But before we wrap things out, let's look at how the markets are doing, and they are not doing too well because Nifty continues to slide lower. In fact, it has broken below the 21,700 mark. We are very close to the day's low. The day's low sits at around 21,670, just about 13 points shy of it. Broader markets are feeling the heat as well. Both mid cap and the small cap indices are down 1.5 to 2.5%, and volatility continues to remain elevated with India VIX above 16 level. But that's all we have in this edition of First Take. Stay tuned as we'll be right back with Business Plus on the other side.
मेक इन इंडिया जैसे है ना, वैसे ही एक मूवमेंट चलना चाहिए।